Joining us right now for more on all of this is Greg Branch. He's managing partner at Veritas Financial. Also, Rubila Faruqi, who's chief U.S. economist at High Frequency Economics. And Rubila, let's just start with you, because I think you're looking for a slightly higher number than the consensus. Consensus is for 845,000 jobs. You're looking for more like 875,000?
That's correct. So, I mean, really, at this point, we're looking for a very strong number, fine-tuning it after the ADP data. We don't generally do that. But we are looking for job growth to pick up as, the near-term effects that are resulting in shortages, including enhanced unemployment benefits, health fears, and childcare. As these factors diminish, we do think that job growth is going to pick up. Really, it's unclear whether we're going to, the disruptions that we're seeing are going to go away with the July report. So, I wouldn't be surprised if the number is a little lower. But I also wouldn't be surprised if the number is a little higher. As you mentioned, there's such a wide range of uncertainty here that, and that is apparent in the forecast range as well.
However, Greg, look, we may not be surprised if the number's hotter or cooler coming into this. The market, though, probably will react one way or the other. We saw this with ADP. When the number was half expectations, there was downward pressure on stocks and downward pressure on Treasury yields. What do you anticipate? How much is the market really going to read into this? How much of a reaction do you think we could get one direction or the other?
I think it'll actually be pretty muted this time around. Remember, ADP was before the jobless claims numbers. The jobless claims numbers came in right around consensus at 345,000, which demonstrated that the Delta variant is not yet affecting the currently employed. Now, we're really early in this story, and I suspect we'll see some deterioration in the coming weeks if we don't get a better handle on it. But in that context, at least we're showing that the Delta variant isn't influencing currently employed. Now, in order to get the GDP growth we're all expecting, we need to move above the 61.6% of Americans that are either working or looking for work. We've been there for about a year, and that's really where Delta will rear its head. Is it going to diminish the working pool, the pool of workers we expect to return in September, when 7.5 million people lose those generous Fed benefits, when kids are back in school? And that's just something we won't know yet. But if we start to see deterioration in those weekly claim numbers, I think that's actually more important than what we'll see today if it's plus or minus 10%.
Hey, Rubila, the Fed is facing some pressure. We hear it just about on a daily basis about whether they need to be moving sooner rather than later. If this number comes in very hot, what do you think that does in terms of putting additional pressure on the Fed? Obviously, the Delta variant's out there, and they can say, look, we're waiting to see what happens with this. But inflation's an issue, and you even have Democrats who are kind of weighing in on this.
Yeah, absolutely. And, the Fed is getting pressure from all sides, right? So from even within. So there is a lot of disagreement, I would say, discomfort with what's going on with inflation. And I think if the number comes in, much better, 1 million plus, maybe even 1.6 million at the high end of the range, I do think that the pressure builds on them to move faster. I am actually kind of surprised and maybe puzzled at all the different messaging we're getting from within the Fed, because, Chair Powell is sounding a very dovish note, but you've got, Christopher Waller, the Governor Waller, who is actually sounding quite hawkish. So I do think that there is a lot of, a wide range of opinions. And I think that if the numbers are, if the July and August numbers are much stronger, then the pressure builds. Does it matter whether they announce a tapering in September or November? I don't think so. They are going to taper. It is coming. It's just a matter. Obviously, for markets, it matters. It's just a matter of, when the decision is, when they actually announce it.
Greg, equity markets keep hitting highs despite the return of the virus with the Delta variant. I guess that's in large part because of earnings, which have been so much better than anticipated.
Right. And so, we've had record third quarter earnings with 85% of companies beating their estimates, which is what we expected. Recall for months I was saying that consensus was underestimating the earnings power of the companies. In some cases, we had estimates 60, 70% of pre-pandemic levels. But through this upward revision cycle we've seen over the last 4 or 5 months, we've caught up to that. And, when I look into the back quarter, I'm not so certain that estimates aren't too high in some places. But the market has been doing exactly what it should. with the posture from the Fed that they're going to do nothing to combat the inflationary pressures roiling our economy, and with record earnings and 85% of companies beating and then experiencing further upward revisions, the market's done what we expected. Now the question becomes, what is our outlook for growth in the back half of the year? And I think that there's some risk to what we think, because at the end of the day, our trading partners, our sourcing partners, are countries that are much less progressed in the vaccination curve than we are. And so when we look at Mexico at 20%, Taiwan at 1.8%, Thailand at 5.8%, these are economies that are retrenching in their shutdowns, which, as our colleague indicated, continues that acute inflationary pressure for a duration longer than we expected. And we can't just keep moving the goalposts on what transitory means. I think that our supply chains will be impacted for the rest of this year, quite frankly.
Greg Rubila, thanks for your time, and we will talk to you both soon.
Thank you.
Thanks.